All right, chapter 11. This is reorganization, remembering that, memorizing that. Good points there. Chapter 11, this is a legal process. It's going to allow businesses to reorganize their debts and restructure their operations while continuing to operate. It's often used by businesses that are struggling financially, but they have a viable path to regain profitability. For example, Toys R Us. I mean, it's not a crazy idea to think that a toy store can continue to sell toys. So let's help them to get through this process. Now, who can file this here? This is generally available to most businesses, including corporations, partnerships, and sole proprietorships. However, there are some exceptions here, as we saw kind of on that graphic earlier. Stockbrokers, savings institutions, insurance companies, banks, and small business investment companies. These are not going to be eligible to file for Chapter 11 bankruptcy. This form of bankruptcy can be commenced either voluntarily or involuntarily. Well, let's just pause for a second. Make sure you're memorizing items such as these. You could have a list, multiple choice question. Hey, we've got a couple entity types which can actually go through with this bankruptcy type. And that is totally fair. You could see a sim on that. Much more likely multiple choice questions, though. Lots of sims are going to be coming from the tax portion of the exam. And then voluntarily or involuntarily, super important as well to know that which types of bankruptcy can be voluntary or involuntary. Now, reorganization during the Chapter 11 bankruptcy process, a committee of unsecured creditors is formed. This typically consists of the 7 largest unsecured creditors. Their role is going to be to represent the interests of all the unsecured creditors in the bankruptcy proceedings. So let's think about this. We've got a company, Toys R Us, and they owe money to their suppliers. They owe money maybe to an electric company. They owe money to a real estate company. They owe money to a lot of different groups. The Toys R Us owes money to a lot of different groups. However, it would be a little ridiculous to have, let's say, 100 different parties in the room at once. So the 7 largest unsecured creditors are going to be there. This role is to represent the interest of all those unsecured creditors. It's kind of like representatives, indirect democracy, all that good stuff. Now, in most Chapter 11 cases, a trustee is not appointed, allowing the debtor to remain in control of their business operations as a debtor in possession. However, a trustee may be appointed in cases of fraud, gross mismanagement, or other extraordinary circumstances. The debtor's exclusive rights. Well, the debtor has exclusive right to develop a reorganization plan during the first 120 days after filing for Chapter 11 bankruptcy. Other parties can file a plan if any of the following conditions are met. So if a trustee has been appointed, other parties can. If the debtor has not filed a plan within 120 days, they can. And if the debtor filed a plan, but it was not approved by every class of creditors, that would be another case in which that would be allowed. Acceptance of the plan. The reorganization plan must be accepted by creditors and stockholders. To be accepted, the plan must be approved by at least 2/3 of the amount of claims in each class of creditors. And once the plan is accepted, it is applied to all debts regardless of whether individual creditors accepted the plan or not. So you might be SOL if you didn't get your way. Now, Chapter 11 is intended for business debtors. However, individuals are also eligible for relief through Chapter 11. Just keeping that in mind. This is just kind of a recap going over our process again. So Chapter 11, the debtor is going to file that reorganization plan at any time during the case. If the trustee has not been appointed, they have the right to file a plan within 120 days, just beating that to death in your mind. Other parties can file a plan under those circumstances. Kind of just a recap of what we saw. The plan must classify all claims, describe the treatment for each impaired class, treat claimants within a class identically, and establish ways to implement the plan. Creditors and equity security holders must be given the opportunity to accept or reject the plan. Impaired claims and interests are deemed accepted if they meet certain criteria. Another example, let's say during 2020 to let's say 2022, we had a lot of big cryptocurrency issues going on, right? We all remember that wonderful time. And there were brokerages. Think of them like just a Fidelity. And imagine if Fidelity, so Fidelity is a company that has shareholders, but they've also got creditors, such as those keeping their money with Fidelity. Now, yes, Fidelity is a different case because there's a lot of insurances, FDIC insurance, a lot of investment insurances. It's a well-established company. But imagine if those protections were not there. And once Fidelity declared bankruptcy, because let's say they were doing a lot of risky things with all the investments, you've got the shareholders, so those who actually own Fidelity, and they have shares in Fidelity, and you've also got the creditors, so those who were keeping money with Fidelity, as well as, let's say, again, kind of their landlord or any other parties that they were doing business with. So that's what I'm just kind of using that as an example to paint a visualization. Yes, it's not fun that happens in real life. People lose their money, but this is what we're going through, trying to get everyone back their money as best as possible. Now, generally speaking, those individuals that kept their money with Fidelity would be unsecured creditors. The court confirms the plan if it meets specific conditions, such as being accepted by all impaired classes, providing full payment for priority expenses, and being actually feasible, as in it's actually going to be able to get done. A plan can also be confirmed through a cram down, even if not all impaired classes accept it, as long as it is not unfairly discriminatory and is fair and equitable. Again, this is kind of just a recap, just not too crazy. If you understand the slide before it, you're good to go. Now, once confirmed, the plan is binding on all creditors, equity security holders, and the debtor. The debtor then pays the debts according to the plan. Confirmation generally discharges the debtor from pre-confirmation debts, except for those not discharged under Chapter 7. Confirmation also terminates the automatic stay. Remember what that is. Make sure you do not forget. All right, moving on. In a Chapter 11 bankruptcy, there are several key elements involving creditors and equity security holders committees, as well as the debtor's role in the process. Right, everyone's going to kind of get it in on the process, form a committee. Everyone wants to have their say because it's totally fair, right? Everyone wants their money back. The investors want their money back. The creditors want their money back. And this is here to create more of an organized process. So it's not a mad dash, a scramble, everyone trying to, in a disorganized way, like you can kind of think of it like a run of the bank. It's not a run of the bank, but you can kind of think of it like that. Everyone's trying to get in there, get their money back. So the creation of the creditors committee shortly after the relief is effective. A committee of unsecured creditors is appointed, usually comprising willing persons holding the 7 largest unsecured claims against the debtor. Remember that number 7. Small businesses with debts not exceeding a set amount can request that a creditors committee not be appointed. We've got the equity security holders committee. So these are the investors. If the debtor is a corporation, an equity security holders committee may be appointed, consisting of the 7 largest holders of the equity securities. So probably not going to be me and you, but maybe PE firms or hedge funds, something like that. This committee ensures that the equity security holders receive adequate representation. Both the creditors, so debt, equity, both of our methods of financing companies, security holders committees can consult with the debtor, investigate the debtor's finances, and participate in preparing the reorg plan. Now, lastly, here we've got the debtor generally remains in possession, as we mentioned in a Chapter 11 reorganization case. While committees are appointed to consult with and advise the debtor, a trustee is generally not appointed. Instead, the debtor remains in possession of their assets as they're presumed to be in the best position to run the business. This allows the debtor to continue operations while working on restructuring their debts and obligations under the bankruptcy process. And that makes sense, right? The goal here is that the entity will continue after the fact. So if that's the case, we don't want someone who doesn't really know how to run the business coming in and just messing with things. Whereas with, let's say, liquidation, yeah, the person coming in generally knows what they're doing. The trustee knows, all right, let's sell the vehicles, let's sell the furniture, get that in cash, distribute it to any creditors. That's kind of the same process overall. But in this case, we are trying to, again, make sure the business continues afterward. And I would very much associate these attributes and aspects of these types of bankruptcy with the examples I gave. So Toys R Us, all of those examples. It just helps to think of it with an actual example in mind. At least it helps me. If it doesn't help you, do your own thing. But I am giving you my best advice that I possibly could. We're going to hit some more points on Chapter 11. Well, the reorganization plan under Chapter 11 is not going to be approved unless the plan provides for the full payment of administration expenses. This includes filing fees, lawyer expenses, accountant expenses. Got to pay all of those important people, right? So basically, yeah, the plan will not be approved unless it accounts for paying all of the expenses to get the plan completed, which I think sounds fair. Let's talk about a few other points as well. Court confirmation. The bankruptcy court plays a crucial role in the process as it's the only entity that can confirm a reorganization plan. Confirmation means that the court approves the proposed plan as meeting the requirements of the bankruptcy code. So even if there's not a trustee, you still have to go to the court and say, here's my plan. What do you think of it? Creditors and security interest holders. These parties have a say in the acceptance of the plan as they vote on whether to approve it. Their approval or rejection can influence the court's decision to confirm the plan. As we kind of mentioned before, they have their committees. Unimpaired parties, parties whose claims are not affected by the plan, such as secured creditors, are presumed to have accepted the plan. Therefore, their vote is not necessary for the plan's approval. These are parties that are just going to be okay anyway because they're secured creditors, right? They're latching on to the entity and going to get their money back afterward. equity security holders, a plan does not need to be approved by 2/3 of the shareholders. Instead, it needs to be approved by the holders of 2/3 of the outstanding shares or interests. So, important distinction here, not 2/3 of the shareholders, 2/3 of the outstanding shares or interests, which can be held by fewer than 2/3 of the shareholders. So, I mean, let's just say one person owns 50% of the company, and then a bunch of other random people own the other 50% of a company. Well, if that one shareholder says, yeah, I want to approve it, that's already 50%. So we just need a little bit more to get to 2/3. That is something to keep in mind. Do not get mixed up with that. And lastly, what is this cram down provision? We've mentioned before, the bankruptcy code allows for a plan to be confirmed through the crammed down provision, even if only one impaired class of creditors votes to accept the plan. This provision enables the court to confirm a plan over the objections of certain dissenting creditors, kind of like cramming down, right? Let's just push it through, as long as it meets the requirements of the bankruptcy code and is deemed fair and equitable. All right, nice little recap on chapters 7 and 11. What is the required information? Well, debtors must provide information on their income and debts within 45 days of filing for bankruptcy. Both of these can be voluntarily or involuntarily initiated. For voluntary cases, individuals do not need to be insolvent to file for bankruptcy. We've got those tests. And the court grants an order of relief, which provides protection to the debtor. For involuntary cases, farmers and charities cannot be forced into involuntary bankruptcy. As I mentioned in a few other lessons, farmers historically, well, we're a very agriculture based economy, even if maybe most of you taking this exam are from bigger cities dealing with big accounting firms in those cities. This country is based on farming. So, as such, over the, say, decades, but hundreds of years, it has gone into the tax code to protect farmers. And charities also kind of think, oh, protect the charities as well. The debtor must not be paying debts when they are due. That's just another term that you need to see. They'll just tell it to you in the question. It says the debtor's not paying their debts as they become due. Creditors must be owed at least a minimum amount, which changes every 3 years due to inflation. We'll have that linked in our resources as well. If there are fewer than 12 creditors, one or more creditors must be owed this amount. And if there are 12 or more creditors, at least 3 creditors must be owed this amount. So that's something to note as well. And there is no order of relief in involuntary cases. And we'll dive into that even more as we go forward. During the gap period between filing and the court's decision, creditors have high priority. If creditors wrongly filed for involuntary bankruptcy, the debtor may sue for damages, including punitive damages if it's filed in bad faith. So that's actually another interesting point. If these creditors, so you owe money to a bank, you owe money to a utility company and a vendor, they all come after you. They petition you into bankruptcy involuntarily, and it was wrongfully done, you can actually clap back and sue them for that instance. I mean, they're putting you through the ringer, right? And maybe a little defamation thrown in there. So just keep that in mind as well. Another thing to see when we go through all of this is that generally the creditors get paid first, and the last to get their money back are the investors, the equity holders. That's something as well that we'll see. Yeah, when you are a shareholder, you actually have a lower priority than creditors. So debt takes precedence over equity. Property included in bankruptcy, it's going to be all the assets, whether those are real and personal assets at the time of filing, and property received within 180 days of filing, such as divorce settlements, inheritance, insurance proceeds, and income generated interest. So any property that you receive within 180 days of filing. So you start, it's like, hey, I filed for bankruptcy, and then within 180 days, I'm also getting a few checks in the mail. I'm getting some gifts. I'm getting some inheritance. All that stuff is included as well. Property excluded from bankruptcy. These are items that are necessary for the debtor to live unless there's a lien on the property. Again, that's kind of like a motorized scooter. Think of that. Or like, say, a basic car that they're just driving to and from work to make money to help pay for the whole process. The trustee has priority over everyone except those with perfected security interests, such as PMSIs or statutory or judicial liens. And we beat it to death in the secure transactions lesson on PMSIs and all that good stuff. Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.